All right, lots of bullishness out there thanks to this earnings season, but is one group of investors unrealistic in its optimism? Brian Luke joins us to talk about one sector that has priced in a near-perfect recovery, and we're talking about one that I love to hear about.
Yeah, we're talking about high yield. But, when you think about it, we've seen 50% returns in the NASDAQ from the bottom. We've talked about a strong earnings season, possibly pointing towards that V-shaped recovery. But, Bank of America strategists have pointed out the high yield sector, and in particular, CCC credits have come so far. And let me show you this just to illustrate this point, because there's that part right there, Matt. That's what they call not just a V-shaped recovery. It's gone straight down, straight up. That's an I-shaped recovery. And so the question is, and Bank of America strategists are asking, where's the value after this?
Where is the value coming after this? That chart obviously shows how fast these bonds have moved, but at 70 cents, can they have any more room to run?
Well, that's a good question. I mean, 70 cents on the dollar right now, bonds will mature at par or 100 cents, but you've got to factor in, when you're talking about junk, they call it junk for a reason, you've got to factor in default risk, companies failing to pay their obligations. Now, the same strategists that we're talking about at Bank of America, they pointed out with a very conservative 20% default rate, Matt, and with a 20% default rate, they project that the returns at current prices are only going to yield you about 1% a year for the next 5 years. So keep in mind, that's a very conservative 20%, because last credit crisis, the last credit average default rate was 40%.
So, all right, quickly, we've seen this kind of optimism in the riskier equities, also in junk bonds. Do we see it in safer bonds as well?
No, we don't see it at all in investment-grade credits, and that's what's really interesting. It's sticking out as an I-shaped recovery only in CCCs.
All right, Brian, thanks very much for that.